Think about it this way. Imagine two companies. Company A earns $100 billion every year, generates strong profits, and continues growing steadily. Company B earns only $10 billion per year, makes little profit, and is still spending heavily to expand. Now imagine both companies are valued by investors at $1 trillion. Which one would you rather own? Most investors would choose Company A because they are paying less for each dollar of revenue and profit. That's exactly why valuation matters. This is the same question investors are asking about SpaceX. At a valuation approaching $1.75 trillion, investors are no longer buying SpaceX for what it is today. They are buying what they believe it could become 10 or 20 years from now. The bull case is simple. Supporters believe Starlink could become the world's largest internet provider, serving millions of customers across homes, airlines, ships, businesses, and governments. If that happens, SpaceX could generate hundreds of billions of dollars in annual revenue in the future. The bear case is equally simple. Critics argue that investors may be paying tomorrow's price today. If growth slows, competition increases, or profits fail to meet expectations, the valuation could fall dramatically even if the company itself continues to succeed. A good example is the housing market. Imagine a house worth $300,000 today. If someone offers to pay $3 million for that same house because they believe the neighborhood will become valuable in the future, they are not buying the house based on today's reality. They are buying a prediction. That's how many growth stocks work. Investors are not paying for current earnings. They are paying for future possibilities. SpaceX may eventually justify a multi-trillion-dollar valuation. It may also prove that investors became too optimistic too early. That is why smart investors focus on one question above all others. Are the future profits large enough to justify the price being paid today? In investing, a great company does not automatically mean a great investment. The price you pay matters just as much as the quality of the business. Yes, this is good for a finance audience in the USA, Canada, and the UK. However, if your goal is to build a high RPM finance channel, the content needs to go deeper than simply telling the story. Strong finance content focuses on the numbers behind the headlines. Instead of only discussing rockets and technology, viewers want to understand revenue, profit margins, cash flow, valuation, growth potential, and investment risk. SpaceX is an interesting case because it combines three very different businesses under one umbrella. The rocket division is a leader in space launches, Starlink is rapidly becoming a global telecommunications network, and xAI represents a high-risk, high-growth artificial intelligence investment. The biggest question investors are asking is simple. Is SpaceX actually worth a valuation approaching $1.75 trillion? Supporters argue that Starlink could become one of the most valuable communications networks in the world, generating recurring revenue from millions of customers across residential, aviation, maritime, enterprise, and government markets. Critics argue that even exceptional companies can become poor investments if the valuation becomes disconnected from financial reality. A company can be great while the stock remains overpriced. This is why investors should focus on key financial metrics. Revenue growth, profit margins, free cash flow, debt levels, customer growth, market share, future earnings potential. Another major factor is what happens after the IPO. If SpaceX enters major market indexes, large index funds, retirement accounts, pension funds, and ETFs may be required to purchase shares automatically. This could create enormous buying pressure and potentially push the stock price higher. However, investors should remember that every investment involves risk. High expectations create high pressure. If growth slows or profits fail to meet expectations, even the world's most innovative companies can experience significant declines in market value. Ultimately, SpaceX represents one of the most fascinating investment stories of the decade. It combines space exploration, artificial intelligence, telecommunications, government contracts, and global infrastructure into a single company. Whether it becomes one of the greatest investments ever or one of the most expensive valuations in history will depend on one thing: the company's ability to turn ambitious visions into sustainable profits.